Okay guys, so the Fed got you down by just making that printing press go brrr, printing all that money. Well, don't fear, because today I'm going to show you how to protect your wealth and your cash against hyperinflation and actually profit as a result. Now, if you didn't know, about 40% of all the US dollars in the entire world were printed in the last year. That is an insane amount. And the fact that we're not seeing rampant inflation right now is probably largely due to mostly it's not actually happening at the ground level with the price of commodities and actual goods and services. It's mostly the inflation is happening in asset prices like real estate and stocks. As you can see, they're going through the roof with all this excess money in circulation. But you may not care about that. What you really care about is how do you protect all the money you've got stacked away in your bank account. Well, the best and probably most profitable way to do that is actually to invest in real estate, guys. Now, let me tell you why. Now, obviously, I'm a big proponent of real estate, but there's a good reason for it. And it's because it's such a good asset to have. Now, you can use other hard assets like gold or jewelry or anything that has intrinsic value that is typically high worth or easy to transact with others, is always in high demand. But real estate is going to give you the most benefits by far than those other assets, because the other assets, they will typically always have intrinsic value no matter what they are. But real estate is actually, you're not even going to just the value of the asset's going to go up, but also some other benefits. So with real estate, if the value of money goes down per dollar, so for example, inflation is where, the value of your money has less purchasing power over time. So for example, if I can buy a hot dog for $1 on one day, and then the next day, the same hot dog costs me $2, my dollar just lost half of its purchasing power, and I was effectively, robbed that value. So you want to try to protect that, have as little money as possible. All right. So let's just take an example. So I want to buy a rental property, right, with my money to protect it against all these things and obviously make money as well. So what I'm going to do is buy that property. I'm going to go get a loan, right? Get a mortgage on it. Okay. Now that mortgage is for a fixed amount of dollars. So we'll just keep it real simple and easy. So say I buy a $250,000 house. For 20% down, get a $200,000 30-year fixed rate mortgage, right? Great, awesome. So now making money on rent, the property is appreciating, and I have to pay down my $200,000 mortgage, right? So say we start having rampant inflation, the value of money starts to go down, and guys, we do have about 2% inflation every year. That's what the Fed targets. But say we start getting stupid, and inflation is just like it's insane, and the value of money starts dropping like a rock, which is probably unlikely to happen, but what if it did, right? So what you got is that you have an intrinsic valued asset of this piece of real estate, say it's a house, right? And you have a fixed loan amount you're paying down, and the property is worth something, and you're getting a certain amount of money in rent every month. Okay, so say the value of the dollar starts going down. Well, that's actually good for you because you have this mortgage that's $200,000, right? So say at the time, $200,000 is worth $200,000, but say, a year from when you get it, the $200,000 is really only the value of about like $100,000 of that same money, right? Because of inflation, because the actual value of dollars has gone down so much, right? That actually means that you can pay that off a lot easier and actually build up more equity in the property, all the while, the value of your property, because it has intrinsic value as a living place or something like that, it's actually going up with the rate of inflation, because obviously, something is worth whatever somebody's willing to pay for it. So, the rate of your rent and the value of your property will always have at some point a very competitive market value, regardless of where the value of the currency is. You'll always be able to get an equal amount of money in exchange for your asset. But very soon your mortgage, you can just pay it off like it's nothing, because it's worth a fixed amount of dollars, but every day those dollars were getting less and less valuable. So you're not only your properties are appreciating with the rate of inflation, at least, maybe higher if there's more demand. Your property is, you can raise the rents accordingly to whatever the market rate is, and then your actual mortgage is getting destroyed because you're able to pay it off super easily, because the money that you originally got it for is now not worth nearly as much. So at the end of the day, you'd have a property scot-free that you owned outright, that you could, would be worth a lot of money at that point, and then it would also be renting at a very high amount. So that is how you protect and actually profit from a high inflationary environment. You remember, you want to keep out of cash as much as possible. Cash is trash. You know, you want to try to convert that cash into a fixed asset like a real estate. And if you can't get into real estate for whatever reason, definitely buy things like like gold, other assets like that, where they're always going to have some intrinsic value regardless of the price of money at a given time. So there's your awesome tip. If you like this video, click like and subscribe for more, and I'll see you in the next chapter.